Good afternoon. This is Tim Wegman with BIS Commodities. Taking a look at this week in review. Let's just start out and see where we close for the week. We'll start out December corn. We closed just shy 16 cents lower in the December contract at 351 3/4. No beans down 13 and a half. Just under 831 is the settlement price there. December wheat, a tick better, 1/4% better on the week at 511 and a half in the December contract. October hogs up 57 cents on the week, 56.22. That's in the October contract again. October cattle, big winner this week, up $3.85. We closed at limit up today in the October contract at 113.80. Oil looks as if it's going to close about $1.25 or so higher at this time frame, up right around that $69 mark. The dollar looks like it's going to be a little bit weaker on the about 40 points weaker, just shy of 95 points or so on the week. Taking a look at the grains to start out with. The big news item on the week was our monthly supply and demand report. All eyes were going to see what was going to take place as far as WASDE was concerned, as far as production estimates. And the big shock there was a much larger than expected yield upward adjustment in corn, up over 3 bushels. The USDA or the WASDE had us at 178.4 prior to the report, or last month's. We jumped it up to 181.3. Record numbers out there. I took an account on that. We were seeing record ear counts out there. No argument there. Record ear weights moving forward as well. About 10% of it was actual hard data figured into this report. We'll see in subsequent reports. Historically, when we see an increase from the August to the September report, we usually see follow through in subsequent reports. So big corn yields moving forward, don't see much of a drop moving forward. Could be, but yet to be determined. So with that in place, that's a 300 million gain basically in production. That's the third largest increase in production for the August to September timeframe, going back to the early 80s. That being said, we didn't see all the bushels follow through on the balance sheet. We're only up about 150 million or so on the carryout number. Basically, we're just increasing demand against it. So we have a very big demand out there to offset a record corn crop. Carryout number came in. We carried over $2 billion from last year, and we're looking at a carryout of $1.774 billion. Guaranteed to change next month. So when you take a look at it from a stocks to use ratio, this is the tightest we've seen. It's going back to 2012. Our carryout is a little bit bigger projected at this point than 2013 right now, but obviously we have a bigger demand, and that's probably why we do see the corn market finding some support on the contract lows. We did see the market sell off a hard 13-14 cents upon the release of these numbers, and we did go down and take the December contract out at 350, but we've held there, actually closing above it today. I think that'll be the key moving forward next week to see if we consolidate down in here. Certainly, end users are going to view weakness as an opportunity to get some protection in place on weakness. The question is how much selling do we see moving forward? Soybeans, we were looking for an increase in yield there. The trade was looking for a large increase, and we did get it in yield, where we bumped that production estimate on bushels per acre up to 52.8. That would be a record if proven up there, and that's up from last month's 51.